All right. Joining me is Alex Thorn, head of research at Galaxy, who's a leading financial services firm in the world of crypto. And we'll get into exactly what they do, but it's really a lot of everything. You might think of them as like the Goldman Sachs of crypto. And Alex heads up a team of researchers dedicated to the entire crypto ecosystem. He also hosts the weekly podcast Galaxy Brains, where he talks all things crypto, like we'll be doing here today. Alex, it's great to connect. Welcome to the podcast.
Thank you so much, Nate. It's great to be here. I've been a longtime follower of you on Twitter, particularly since the spot-based Bitcoin and Ether ETPs have launched. You've been a great voice providing people clarity and stuff like that. So thank you for having me.
I appreciate that. I always say I don't know that I've had more fun on Twitter or X than I did last year. I'm not sure that I ever will. It was such a fun year with everything going on.
Yeah, it really was. And I mean, just from the run up from that DC Circuit Court of Appeals ruling in Grayscale's favor in August of 23, when savvy observers, we pretty much knew that they were going to end up being approved after that. But you had that beautiful long drumbeat of like anticipatory bullishness, right? And we're all nerding out, reading S1s and 19B4 updates and stuff. And it was good times.
Well, and then you got the wild card with the spot Ether ETF approvals, because a lot of people didn't think those would actually come to market. So that was a little bit of a surprise. That generated some more buzz. I actually had a lot more interactions on Twitter around that than I did with the spot Bitcoin ETFs, if you can believe that.
Yeah, I mean, that was a surprise. I think issuers themselves were surprised. And, you know, we partner with Invesco on BTCO and QETH, which are our spot Bitcoin and Ether ETPs. And I mean, we were surprised. I don't think anybody, I mean, and it seemed like everything happened all at once with that one. It still would be interesting to find out what the behind the scenes story was on that. I don't think we've heard the whole tale.
It'll come out at some point for sure. So, look, Alex, we're going to get into a number of different crypto topics, but I thought it'd be good just to briefly start with your background, because I know prior to Galaxy, you spent 12 years at Fidelity, where you were involved with crypto and blockchain. So clearly you've been involved in the space for a while. How did that all come together? Like, how did you first get involved with crypto?
Yeah, so I worked at Fidelity right out of college, like graduated right into the great financial crisis, terrible time to get a job. Anyway, I went to Fidelity and I worked in the legal group. I was an analyst and later sort of managed forensic investigation for Fidelity Legal. In that role, I mean, Fidelity has like 400 subsidiaries or some number, right? And so like this is a centralized legal group. So I met people all across the company over the years in there. And I also found out about Bitcoin in like 2012 or so and got interested in it, but not diehard, right? And then a few years later, Abby Johnson, the CEO and chairman of Fidelity, got interested in Bitcoin herself and directed some people to start looking into it. And some early, Matt Walsh from Castle Island Ventures was one of those early people, and others. And they were reaching out around the company. Who knows about this thing? We're tasked with learning about it. And a bunch of people were like, you got to talk to this guy, Alex in legal, because he's been talking our ear off about it, like on random, over the years. And so I started doing some extracurricular consulting with that early group. And then, it took some networking and movement. And I did a stint as a senior compliance official at Fidelity Institutional along this path, but eventually negotiated / arranged for myself to become head of blockchain research at Fidelity. So I was that. In like the 2017 cycle. And then there was interest for Fidelity leadership, I should say, to start doing some crypto venture capital investing. And I and another guy were tapped to run that effort, and that was called Avon Ventures. That still exists. My good friend Sachin Patodia runs that at sort of an adjacent multifamily office setup that Fidelity has, because that's not balance sheet capital for Fidelity. That's actually like owner capital, right? But so did venture investing in crypto for 3 years or so. And then opportunity came for me to go to Galaxy and build and lead a new research department. And I said yes. And I've loved it. Actually, my 4-year anniversary, I think, is today at Galaxy. So 4 years in crypto, it's like, 20 years in real life. And but I've been in and around crypto since, and Bitcoin in particular, since 2012, been interested personally, basically worked on it full time now for 8 to 10 years. It's sort of like the show that never gets uninteresting, right? I mean, there's so many sagas to follow, and also so much fascinating innovation to learn and write about and build, that it just keeps getting interesting. And gosh, I mean, now is even more interesting yet again.
Well, we're going to get into some of those sagas for sure. Very quickly, what does Galaxy
Oh yeah,
do? I mentioned sort of like the
yeah,
crypto
yeah.
equivalent of Goldman Sachs. I don't know if you agree with that. Just talk about what
I think it's a
Galaxy does.
reasonable shorthand for understanding it. Like Goldman, we have a large global markets division that does everything from trading spot and derivatives and lending and also investment advisory, and investment banking, right? So and then we have digital infrastructure solutions, which is primarily two business lines, but it's our Bitcoin mining, which we mine a lot of Bitcoin. We have a giant site in West Texas, and staking services, right? We also provide staking services for institutions, and then we have an asset management business, right? Just again, like the big banks, very similarly structured. I mean, I think it, and of course they run public ETFs. They are sub advisors and partners with Invesco in the U.S. for spot-based ETPs, but also with CI Global in Canada for spot-based ETPs, and Itaú in Brazil, and DWS in Europe, right? There's sort of that's been our strategy with the spot bait, but they also have actively managed funds, liquid hedge funds that people can invest in. And we have research, and we have, it's sort of a lot. It's a lot. But we basically trade, lend, provide access to digital assets for institutional investors. So we don't directly face retail at all, in general. So we are institutional focused, and we kind of do it all. We have a large venture portfolio and venture team, and it's sort of everything. It's like, if you, and there's a lot of things like this. I mean, DCG was similar, although very differently structured, but like, again, had lending and trading, had asset management, has mining, right? Like it has venture, right? Very, sort of like, I think if you're early, like Mike Novogratz was, and you say, I want to set up like a crypto thing, and you're like business, and you're like, well, what should we do? A lot of people that have been in that spot are just like, let's do it all. Let's try it all. Let's see what works. Let's do everything.
And that is you. Well, look, you mentioned the saga of crypto, and as I thought about your role in research, I have to imagine a lot of what you've been monitoring here recently is this shifting regulatory environment around crypto. And you look over just the past month, I mean, we've had President Trump sign an executive order outlining key crypto initiatives. SAB 121 was rescinded. The SEC established this crypto task force. I know you saw last week there was this fairly lengthy statement from SEC Commissioner Hester Pierce where she laid out her views on the SEC's roadmap here. I mean, we had crypto czar David Sachs. He held a press conference at the Capitol, right, with key congressional committee chairs. The bottom line is that there has been a lot going on. And I thought a good place for us to start would be to just take your temperature on all of this. I'm assuming you view this is all fairly positive, but give us some color here. Like, what does this all mean?
It's historic. You've got the U.S. government mobilized across multiple agencies trying to determine what the path forward is for digital assets in America, potentially for the next 100 years. Right? We haven't had a lot of updates to the Securities and Exchange Act. Right? We're still talking about 33 Act funds. Right? Like we're talking about a law that was passed in 1933. Right? So like this stuff, financial regulatory frameworks and laws and regulations tend to be important for a long time. And the government is across a range of all the agencies. You can look at the crypto EO. It has, the Treasury, the Homeland Security, Commerce, SEC, CFTC. By February 22nd, all of those, and there's more, are ordered to deliver to the working group, aka like the White House. The White House's deputy on this, David Sachs, a comprehensive list of every digital asset related item inside their jurisdiction, right? And then a month after that, March 24th, they have to then take that list and deliver a comprehensive list of recommendations on what should be changed, what should be gotten rid of, maybe what should be added. That presidential working group is serving as a forcing function for the arms of the executive branch of the U.S. government to do a full catalog and possibly makeover of the U.S. government's approach to crypto. And so, I mean, you're looking at, I mean, it's why it really is. I mean, I called it entering a digital golden era, a little bit of a pun there with digital gold. President Trump has said a golden age. He doesn't just mean with crypto at all, but like they are in the government, not even just on crypto, moving fast on a lot of things. So I think it's a very exciting time. I think we're likely to get a much more progressive regulatory framework that is supportive of innovation and protects consumers, but that, where government, I mean, Commissioner Hester Peirce was very clear about this. And in her note, I just interviewed her today on my podcast. They are begging people to come in and talk and help them figure out what to do, right? And that open door at the SEC, as an example, had been sort of lip service when the last guy said it. There were a number of entities that did go in and try to register and talk, and some have said that we went 10, 12 times, and then they turned around and sued us based on the information we gave them. I don't think that's going to happen this time.
Let me ask you this. Clearly, the executive branch, they can make this a priority. That's going to help move the needle. We're already seeing indications of that. But where do you think crypto stands on the priority list of Congress overall? Because there's a lot on their plate when you think about trade and immigration and everything else going on. And even if this is a priority for the Trump administration, I'm just wondering how long do you think it might take for real change to happen? Like, what does that timeline look like?
Well, a lot can be done without Congress. I think the SEC is a great example. They have broad rulemaking powers. So like inside the world now, so they can scope some stuff out of their jurisdiction, which Commissioner Peirce has made pretty clear is something they're probably going to do. Say like, hey, these things aren't securities. Some of them, not maybe all of them, but some subset. And therefore we have nothing to do on them, right? They can also put in new registration types and requirements and licenses and alter the existing broker dealer and all that stuff. So there's plenty that like can be done without Congress. However, obviously, Congress, even in the last Congress, I mean, we had multiple bipartisan bills passed out of the House. I mean, FIT 21, the SAB 121 overturn. The SAB 121 overturn got right to all the way to the president's desk. He was forced to expend political capital to veto it, which is actually shocking for like a pretty arcane, like kind of accounting guidance from a financial regulator to get to the president's desk. So look, a lot can happen without them, but Congress has made clear that it's very interested in two primary first big pieces of legislation. You have stablecoins and market structure as sort of the terminology of defining it. And I would say David Sacks's press conference from the U.S. Senate, February 4th, was with the key committee chairs from both houses, both the House and the Senate. So it was bicameral. It was by committee, right? It was both agriculture and finance / banking. It's all the key people, and they didn't make a lot of news in that. It wasn't like, David Sacks didn't take the Pledge of Allegiance on Satoshi's white paper or anything, but they very, in a coordinated way, they were very positive and expressed their deep commitment to moving stuff. So they do want to. I think they're both a lot more complicated than some in the media think, both stablecoins and market structure. And you're right. Particularly in the Senate, floor time is a scarce asset, and they don't have a lot of it. And they have some other big stuff to work on. And, while crypto is very important to this administration, it's not a crypto administration. They got the whole country to run, and they have a pretty big agenda. So I agree. It's not clear. I think we formally predicted, like in our crypto predictions for 2025 that I put out December 31st, that we would get one, but not the other, basically. Like at most, we'll see one actually move to the president's desk this year. Now, I don't know. They're really guiding that is a high priority. So I certainly don't want to stymie any effort of the members of Congress to, establish something. And to be clear, like we want important things that we'd love them to be codified in law. It's significantly more durable and long lasting than regulatory changes. I mean, if the SEC is going to come in and completely pivot from their approach to crypto, that the SEC just months ago, from their approach, like then theoretically, even a really good approach now could be completely repivoted again, right? Like, I mean, it's a little trickier with formal rulemaking than just like totally changing it, but we would like law to codify things like which tokens are regulated by which agency, who can issue stable coins legally. Other great things like, formalize the legal right to self-custody is a big one. It seems pretty easy. So I don't know. They're actually quite complicated. It seems like but it's early. I mean, it's just early. I think there is a possibility, especially if Congress gets really busy with other stuff, that politically speaking, the government, whether it's members of Congress or the administration, can say, look, you're getting a lot of relief from the agencies. Like, we'll get to the bills soon, right? we're busy with other stuff. I mean, you got to fund the government still. They got to do a reconciliation package. Like, I mean, they got a lot of stuff on their plate.
Yeah, you and I both know Congress doesn't necessarily do anything expeditiously. And so let's just assume that this does take a while to get a comprehensive crypto market structure bill accomplished. Are there some milestones or sort of landmarks along the way that you think people in the crypto industry should be looking at as positive signs? Is it what the SEC is doing? Are there other indicators? I'm just wondering, is it litigation that's out there being cleared up? Like what are some of the key milestones to watch just here in the short term?
Yeah, I think I'll start with litigation because you saw that the SEC and Binance jointly requested a stay for 60 days in their case. Obviously, a very positive sign. I think the SEC is clearly going to have a different view on at least the underlying question of what assets are securities. And that is the foundation from which all else flows at the SEC, right? If it's not a security, then the SEC is not involved. Or if it's not a national securities exchange, then the SEC is not involved. So, I frankly, I mean, I don't know, and I didn't ask Commissioner Peirce when I talked to her last night because I know she can't really say anything about ongoing litigation. But I'll be very surprised if we don't see similar stays filed in their Coinbase litigation, maybe their Kraken litigation. Just while they've got to regroup, right? Like they may not want to. The commission may not want to take the same approach in those litigation matters. So I think watching for those, watching the Coinbase docket, the other big litigations that the SEC has, and waiting to see, I think would be further confirmation that they intend to change their approach. Also, I mentioned about the EO and how it orders the departments to deliver. They have to deliver by February 22nd, that accounting. So I don't think that accounting of the issues at each agency, Treasury, CFTC, SEC, will necessarily become public. It's not like we know at the end of the working group in July that the working group has to give a report to the president, and that is almost certainly going to be public. So but you could imagine that, like, when they do the cataloging or then the recommendations over the next 30 days, there'll be more talk. They might come out and say what they gave the working group, right? I mean, the SEC is already under Mark Ueda and Hester Peirce's leadership on this issue been very transparent. I mean, the piece that she wrote, The Journey Begins, and published on February 4th, which I actually was the same day as the David Sachs press conference, which was, of course, historic. But I actually think her statement was the biggest crypto news that day, not the presser. She is basically laying out, like, here's everything I think we might need to work on. Now, that was her view, not the commission's view at the time, but and she's a famous advocate for transparency at the SEC. I encourage everybody, if you want a great read, go look up Secret Garden with SEC in caps. She wrote this great piece in 2018 about how the SEC functions all too often as a secret garden that's not transparent enough about its thinking. Like, what are we thinking, right? And so to have her, anything else that she puts out, I think a lot of what crypto needs, not all of it, but a lot of the issues related to crypto are at the SEC. And so I think the SEC, by the way, like I said, can act with that. It doesn't need market structure. Market structure would just, by statute, like, say who does what and under what circumstances. But she's already talked about scoping some things out of the SEC's jurisdiction. The SEC could just come out and say, Bitcoin and these other coins, at least, maybe others, but these are commodities, and therefore they don't require anything from the SEC. Move along, right? Continue about your business. They don't need the Congress to tell them that, but it would just be good if Congress did. But, Congress as an institution over the decades, it's been one of my big criticisms. Like, it's Article 1 of the Constitution. The president and the executive branch is Article 2. There's a reason for that. Like, the framers wanted most of the people's business done through Congress. The executive branch is there to then effectuate what Congress orders them to do. But for so long, Congress has abdicated a large amount of its responsibility. One of the most iconic ones is the power to declare war, right? We conducted all of this Middle East war stuff under an authorization of military force, no formal declaration, right? And Congress is happy to be like, oh, sure, the XYZ president bombed yet a different country, but they said that, like, the people that they bombed were similar to the other people that we had previously. That's fine with us, right? I personally would like Congress in general on crypto, on everything, to just step up and do more. And take that driver's seat back. It's, it's hard. You can't get 535 senators and House members to, like, I can't just be like, okay, Alex, we're going to do it. Right? I mean, it's harder than that. And the incentives of our political system aren't that conducive to it. But I would like, on crypto, but on other things, Congress to step up. It'd be great.
Well, let's assume Congress does actually step up and do what they're supposed to do on crypto. And this will get us down the path, I think, towards discussing crypto more broadly. But let's be optimistic here and assume everything happens the way the crypto industry wants from a regulatory perspective. I'm curious what you think is next after that, because one of the refrains we both heard, and I've been guilty of this as well, is that we've said, hey, look, the crypto industry, it lacks regulatory clarity. That's holding the industry back. And once that regulatory clarity is here, then I think it's going to come down to crypto proving real tangible use cases and showing it provides real value. I'd love to hear how you think about that.
Yeah, I think you're right. I think, um, we're finally, we clamor and clamor for clarity, for even not just clarity, good clarity, right? Like there were a couple instances where the SEC was more clear, but it was just really bad. Like the exchange definition, the proposed expansion of the custody rule, like they wrote some decently in-depth content about why DeFi should be fully captured by their rules. We just totally disagreed. But I would say it's kind of like crypto is kind of like the dog that barks at and chases the car, right? It's like when the dog catches the car, it doesn't know what to do with it, right? It doesn't know how to drive. And that's kind of crypto right here. We're sort of entering like a show me market, right? The market is going to start to demand more fundamentals, fundamental usage, adoption, products, I think, now that the proverbial regulatory boot is off crypto's neck, and you can't complain. Oh, if it weren't for all this oppressive regulatory either enforcement and action against us or lack of clarity, if it weren't for that, we would be like really blockchains would be really doing a lot for the world. And now we're like, okay, cool, all that's lifted, and you're like, oh, but we need more time. Like it's gonna be, and I think there is an aspect to that. I think outside of Bitcoin, stablecoins, and DeFi, and I can talk about each why, but Bitcoin is widely owned by major institutional investors, nation states, corporates. People believe and understand, I think a lot of people, the digital gold thesis, if nothing else, about Bitcoin. And that is just one way to look at Bitcoin, but that has really succeeded. People believe in Bitcoin as a store of value asset. Stable coins are widely understood to be, at a minimum, I mean, better than even a domestic wire. Like I had to send a wire recently inside the US and still it's like just disappears for like 12 hours. And you're like, where is it? And I don't know. There's no one to call. You don't like call Fidelity or my sending institution. They're like, we sent it. Like, right? Like, okay. Right. Like stable coins, then they've seen massive growth. And like the president has talked about how they're good. Scott Bessent has explained eloquently something we've said for years, that, it's better for payments. It can promote the dollar. It can also be a buyer of treasuries, which we need. Everyone knows that that's a good idea. And then DeFi, the products work. They're like at the high level, particularly like swaps and lending, like have really proven to work. The issue with DeFi, and I think with a lot of what's being done on the blockchains today, the primary use case is that the assets on them aren't that good, right? You got some, you got layer one blockchain tokens for layer ones that, let's face it, they're mostly being used for speculation platforms, right? And let alone you got meme coins. Like if we could get, now you've got stable coins, treasury-backed stables. You're starting to see some financial companies like BlackRock and Franklin Templeton put money market funds. If you could get, I mean, let's just go right at it. If you could put stocks on the blockchain, and then we would really see how useful a Uniswap or an Aave might be in the sort of real world. I think until you see the assets improve in quality, straight up, I think you'll see Bitcoin dominance remain high. Like I think there's a lot of malaise about, well, wait a sec, now that they're allowed to do stuff, there's not really that much stuff people want to do. I do think you're going to see, it's very possible, by the way, that like the sort of bigger decentralization ideas like Web3 and decentralized social or decentralized science or NFTs broadly as a use, those still are in play, but they a lot of those weren't even that hampered by the regulations. So to me, it's like those happen when they happen, but like the moment is now. And I feel like, especially with this SEC, the opportunity to improve the assets that are on these blockchains might be one of the ways that crypto can actually deliver now that the boot is off their neck, right? Like more equity-like features that aren't going to make you instantly illegal to Americans, right? Or more real-world assets coming on chain. So I think absent that, and as the thing, if I'm putting on my markets hat, I think that is going to happen, but it's going to be slow. And look, most likely, they're always like sort of a white swan event. Like, sure, maybe Call of Duty adds NFTs and that totally re-engages the entire like blockchain gaming space. But games are hit driven. It's hard to predict, right? Like there can always be some huge breakout use that comes that people have been working on for years. Frankly, at this point, I expect it will happen at some point, but will happen in the next 6 to 12 months? Don't know, right? And so to me, like you're looking at a market that where I mean, you've seen the meme coin complex, I think, completely implode basically, and that was pretty much what was driving all the activity on Solana. So like now you're looking at people know and want Bitcoin, but that's not the rest of crypto. People may use stable coins, but you barely need to own any ETH or SOL to send a stable coin. Like it's not like it's a huge driver for people stockpiling those native assets. I think what would be is if you had better assets on those things and more true economic activity on those blockchains, then maybe you'd see, for example, a reversal of the ETH BTC ratio, which has just been down only for years now. But if I'm being realistic, you could say pessimistic, but I don't think that's going to happen soon. I think it could happen in the next, 12 to 18 months, more likely than the next 6 to 12 months. And so I think we, from a market standpoint, really find ourselves in a Bitcoin dominated sort of regime. And if you look at Bitcoin dominance, it's at effectively unprecedented levels for a so-called bull market in crypto. So I don't know. I think it's basically crypto's got to put up or shut up now and deliver some stuff people really want. There are a couple we know, like I said, but one way to really enhance that would be to increase the quality of assets on the blockchains.
I think all of that is really well said. I would completely agree in terms of Bitcoin has proven its value, its use case. I think stable coins, that's clear. And there are some good use cases around DeFi, but that space is going to need to continue to evolve.
Yeah, and
You
we haven't been
mentioned
able to
meme
try
coins. Go ahead. Yeah.
the regulations. This is one thing when we talk about like stocks on the blockchain. I don't know if that means that you and I are going to own like Apple stock in our MetaMask wallet. Like maybe it does. It could also just mean that back end clearing and settlement stuff happens on a blockchain. Who knows? But and honestly, maybe some of that. Plenty of smart people are skeptical of this. They say, Alex, you can buy stocks even on Cash App. It's not like that hard to own stocks, right? Like, where's the 10x improvement that's going to plow through the barriers that the existing intermediaries have created to this innovation, right? And I think there's truth to that, but it's also like, look, we've never been able to try. And the SEC, I mean, Hester, number 9 on her bullet from her piece, The Journey Begins, is about tokenized stocks and how, like, we're going to like look at how blockchains and capital markets can, I mean, they're basically saying, come in and propose ideas and we'll see if we can allow you to try it. So we've never been allowed to try. So crypto needs to try. And who knows? I mean, I'm a big believer that innovation occurs by trying things, not by sitting around like with your brain and saying, I don't think this is a good idea. Like, let people try things and something might work. And that might be what gets us there.
You mentioned meme coins. Do you think those are stunting the perception or the growth of crypto? Because there seems to be a lot of debate over these. I would say both from a regulatory standpoint, but again, just from this perception standpoint that meme coins are sort of tarnishing the crypto industry's reputation. Any thoughts on meme coins?
I think there is some truth to it. Certainly makes the industry look less serious if most of what people are doing is speculating on memes. I mean, I have no problem with memes or meme coins in that sense. Like, it's, people are free to, build and buy and trade. I think they should be free if they understand what they're touching and they're not being scammed or defrauded, then they should be able to do sort of whatever we want, but I do think that meme coins are symptomatic of a widespread and much darker malaise and disenfranchisement among primarily like millennials and younger about the state of the economy and the world. I think they absolutely are a symptom of a widespread view that things might not be better in the future, that it may be gambling and speculating on low cap, like, moonshot, like penny stocks effectively is a better path to prosperity than working hard or saving or learning about Bitcoin. And I think that's really sad. And I think it is true. I think there is widespread disenfranchisement and disillusionment about the economy. I mean, decades of crony capitalism and, dysfunctional government and expanding wealth inequality, I think has led to a very nihilistic view among youth. I mean, look at sports gambling and like lottery, all that stuff's up huge, right? And so the cost of a home is out of reach for most. And so I think it actually, even more than what it creates and how it makes crypto look, I think it's actually a symptom of a much broader societal problem about the people's view of their likelihood of having a good future. And that, I hope, that's a bigger problem. I don't think crypto can necessarily solve, the fact that people don't think they have a good future. I mean, it might. I think I'm a firm believer that Bitcoin is a great long-term store of value, but it should be thought of more as a savings technology than a speculation token. I do think, just directly onto your question, Nate, I think blockchains are permissionless and they're great at issuing assets. And I guess we shouldn't be surprised that same cultural thing that has driven sports gambling into the, every TV screen and every home and every phone is also that same culture, I think, is what is making use of blockchains. And that can be okay. It does teach people how to do things like self-custody and use the tools. I think hopefully we find some, more productive use case for those people who've learned how to use the chains than simply just it's gambling, right? For most meme coins. And it is a little tough to go in dressed like this and talk about the game-changing power of public blockchains and be confronted with questions about Fartcoin. It's not the best.
And that's why I brought that up, just in the context of talking about real use cases and the build out of DeFi, just because there is so much skepticism on the traditional finance side around crypto. And my impression, I don't think this is anything enlightening, is that meme coins, it just gives TradFi another reason not to invest or get involved in this space. And you see it all the time. I see it all the time. Crypto is just a scam. How often do we hear that? And Exhibit A is meme coins. And that's my concern there.
Yeah, look, meme coins do make those conversations harder. I mean, I would say, though, to sort of, argue against our point that we're both making, that it's not like it's overwhelming the conversation, and not the ones that I've been in. Most of the big, if you talk about allocators, endowments, institutional investors, RAAs, a lot of them learned about Bitcoin for the first time, heard the word in 2017 or 21. 21 was 4 years ago. Like they actually, in my experience, a lot of them, not all of them, but if they did at all learn about it years ago, they've probably learned a lot more about it since then, just over time, even if they're not actively in. And so like they know that, sure, there's a big thing over here that's sort of sucking a lot of the air out of the room with meme coins. But like I think meme coins also, to be clear, they are not a bad exhibition of what the technology can do.
That's always been my point. I agree. Yeah.
It's like, you can launch a token with a sort of a menu of features, or none at all in the case of most meme coins. And it just turns out that real institutions aren't really able to do that yet, but the tooling's there ready for them. I mean, there's honestly nothing really stopping a genuine equity company from issuing a security using pump.fun. Like they could. It's called Pump Fun. It's sort of geared towards launching meme coins, but it's a token launch pad. Like the tooling is widely available. Or take ERC20 on Ethereum. It's literally like entire libraries of software that's free that like anyone can issue these types of tokens, or there's all these different token standards. So it just so happens that the current free market, I think, in the absence of the ability to put really, really valuable like equity securities on a blockchain, has figured out what they can issue. And it turns out it's featureless meme coins. And honestly, this is actually partially a reaction to the SEC's prior stance in the US. They said, well, you can't issue a equity security on a blockchain, right? Even the way that L1s have been launched lately over the years, ever since like after the ICO era crackdown, was a reaction to we can't sell the tokens to the public. Who can we sell them to raise money to build our project? All right, VCs. And that the whole reason the launch style of a low float, high, fully diluted valuation token, where all the biggest advocates for the token, the investors that helped to fund the company that built it, are only sellers, and it was also a reaction to the approach the SEC took. So in some ways, yeah, I'm going to blame Gary Gensler for meme coins. In some ways, I'm going to do it.
By the way, I don't know if you discussed this with Hester Pierce yesterday on your podcast, but did you see she told Bloomberg this week that many of the meme coins that are out there, she said they probably do not have a home in the SEC under our current set of I thought that
Yes.
was interesting.
Well, and like I said, one of the things that she wants to do is scope out stuff. And I think, again, with the proper disclosures, I mean, I think it's pretty, how different is it really? I mean, I know that pragmatically it can become different, but like if I draw a picture on a piece of paper right now for us, and then I send you a copy, and or not a copy, I rip it in half, and you have one half and I have one half, and then we both list it for sale for $1 million, like, is that a security? Because that's basically what meme coins are. They're collectibles in my mind, most of them, not necessarily all of them. And there are opportunities even in that token type to commit massive fraud and scams. So like, obviously she's also been very clear about that. Like, I think she said in that piece, we do not tolerate liars, cheaters, and scammers, right? Like you will be gone after if you defraud, but that doesn't mean it's a security. You still can't commit fraud with baseball cards. It's still fraud. There's federal laws against fraud, you know? I think that's part of
This,
the approach that she's taking. Gensler's SEC was like, everything's a security and everything has to go through the same process that an IPO goes through, but we're not going to update those documents to actually have questions that are relevant to you.
yeah, there was
So
no
just
nuance
figure it
there.
out. Yeah.
Yeah, 100%. Hey, look, just a few minutes left here. I have to ask you about the crypto ETF space. I think you know we talked about it earlier. I'm an ETF guy, and you look right now, Alex. I mean, we have filings for Solana and XRP ETFs, HBAR, Litecoin, Dogecoin, Cardano. I think there's one out there for Polkadot. Do you like this? Do you think there will be demand for these, or do you have any other thoughts around the crypto ETF space?
I mean, it's such a big question that we're all sort of wondering. It's like if you see the floodgates open, like you don't, you got to expect water to flow through it, right? Like, so I think you'll see more of them. I don't know which, if any, will be approved and go effective and trade. I presume some will for sure. This question is going to have to flow also from the SEC's the first bullet in her thing, which is security status. Like they have to decide which of these are and aren't securities, and that will help inform like the likelihood. By the way, that's what I'm saying. We might learn more about where they land on what are and aren't securities. For example, we learned meme coins. At least she thinks it's not the vote of the commission, but she's probably the most influential person there on the question. She thinks meme coins aren't securities, it sounds like. And well, gosh, Dogecoin's a meme coin. You know, I mean, technically it's a layer one gas token. It's actually better than a normal meme coin. There is a Dogecoin blockchain. I mean, that can't say that for the vast majority of meme coins, but so we get hints about which ones might make it through. In terms of demand, though, you know, look at the ETFs. Now, part of this is because I think they didn't have the 5-month drumbeat run up anticipation, but the Bitcoin ETFs have like 120 billion in AUM or something, and had net flows of over 50 billion. And the thing is like that. I mean, that's huge. Like, knock it out of the park, right? Probably, at least in aggregate, the best launch of all time, right? I've got this chart where I show the AUM of gold ETPs versus the Bitcoin ones, and like gold's still bigger, but it's been 15 to 20 years, and the Bitcoin ones are just straight up, right? So huge demand. And the ETH ETFs didn't have that 4-month drumbeat. Like we talked about earlier, it was sort of sprung. So it wasn't like there wasn't this whole time to do education. Almost nobody had an ETH ETF report. Like we wrote this big report sizing the market and making estimations for how many flows we might see on the Bitcoin ETF report, Bitcoin ETF launches. We had a couple months to write that. I straight up told my team not to bother spending time on the ETH version of it because we were pretty certain they wouldn't be approved. And then they were approved, and we had to race to write about it. So their underperformance is my point. It's significant. Like, obviously they only turned positive in net flows, aggregate cumulative net flows, like the day after the election in November, but they launched in July. And, again, that's okay. And, I think they are underperforming in AUM relative to their relative market cap to Bitcoin, ETH market cap to Bitcoin. Like, they're not, the market broadly values ETH more than it values putting money in those ETH ETFs. And I don't know why. I have some ideas of why, but I'm saying one of them is the launch style was different. But ETH BTC itself, the ratio is down 50% since the ETH ETFs launched, right? And a lot of the Ethereum world was saying, well, it's not fair. Like if we had an ETF too, we'd be doing so great. Well, you have it, and it's been losing ground consistently, a lot of ground against Bitcoin. So I think something bigger is at play in the market, something about Bitcoin having distinguished itself as an institutional grade asset, and maybe nothing else has. And I do think ETH's performance is also a little bit of it getting squeezed in between Bitcoin and Solana, like all that meme coin activity. And one of the, which was, has been a major theme. It's one of the main things people were using blockchains for in 2024. It didn't happen on ETH. It all happened on Sol, right? And so, like, to the extent there was value accrual to the blockchain upon which this activity was taking place, it went to Solana, not to Ethereum. So that also plays a role. But I do think there's a bifurcation here of like Bitcoin and not Bitcoin. And at the institutional level, like, I don't see that much demand for long tail crypto ETPs. So I would not be surprised if many of those have literally like orders of magnitude less interest than the Bitcoin ETPs. And that could change, again, sort of similar to the crypto, like show me market that I was talking about. You know, if XRP finally gets fully integrated into banks and is widely used for that, which they've been talking about for like a decade, and it still hasn't happened. But if it does, then maybe an XRP ownership ETF would do really well. I don't know, but I'm not holding my breath.
Even if demand for those other products is muted, do you see any benefit to those spot crypto ETPs existing? Let's put Bitcoin aside. We can even put Ether aside. Is there benefit? Does that help in the education process with advisors? Do you think that's overstated?
Honestly, if they don't deliver something tangible on the network level, it might not be beneficial. It might harm, right? Because then, I mean, if you're an allocator or an institutional investor that needs ETFs, can't touch crypto spot, of which there are many, now you're seeing a menu with all this stuff and you start asking about it. And if you do some diligence, you might find, and without naming, I didn't mean to necessarily dunk on XRP specifically, but just as an example, all of those ones. I mean, you might find if an institutional investor did diligence on these new ETFs in the menu, they might find that there's not a lot happening there. And it might just like, meme coins can complicate the conversation with institutional investors, so too might this exploding supply of, exchange traded products. Like, so I don't know. I think it could actually harm, at least until they really deliver on the actual thing that they were building. That's sort of the negative take. I mean, the positive take is pretty straightforward. If you're interested in crypto, you now have more items to choose from, and you have more forcing function to learn about blockchains. It's no longer just, and Bitcoin is literally different. It's mostly a great asset. There's not a lot you can do other than, send, receive, hold Bitcoin on the Bitcoin blockchain. That may also evolve. There's people working on L2s, and which we're supportive of. But I mean, like, the other things are not primarily assets. They're primarily platforms, right? Ethereum's old slogan was the world computer. It wasn't digital gold, right? And they've all pivoted, and narratives have all shifted and it is a world computer, by the way. Ethereum does work for that. It's just that, like, most people want to trade memes on those things now. We don't have those durable use cases. So I think it goes hand in hand with my other point about, like, put up or shut up. And it could complicate the conversation. I think a lot of people were saying too, the issuers didn't even necessarily want the ETH ETFs right away, because they would have preferred a lot more time to build out educational materials and all of that, and make it, like, explain really what it was. And then all of a sudden we have them, and we've only just started selling and marketing the Bitcoin ETFs and explaining that story. Like, there's a lot of work that has to go into this, well. So is there going to be, I mean, that's why if you actually look, like, those filings that, like, James Safart tracks in his great graphic, like, it's not Fidelity, BlackRock, Invesco that I've seen so far filed for any of those ones. It's much more sort of crypto native, or even like niche bespoke issuers. And I think there's a reason for that. And it's that, the big institutions aren't really ready to market these things. Even if they might want to, it takes a long time.
You gave me the perfect headline for this particular podcast. It's time for the crypto industry to put up or shut up. That's what I'm going with. That's the title.
I love it. So you're killing birds with stones here, Nate. Now you don't have to come up with it.
Alex, this was so much fun. We'll definitely have to do this again. I think you and I could talk about this stuff for hours, but really appreciate you joining me. Thank you.
Yeah, absolutely, Nate. Thanks for having me.
That was Alex Thorn, head of research at Galaxy. Hope everyone enjoyed this episode of Crypto Prime. Please leave a review or give us a like wherever you're listening or watching. Always appreciate the support, and I'll see you again next week.
Crypto Prime is hosted by Nate Geraci, president of OTR Media LLC. Nate is also president of the investment advisory firm The ETF Store. While OTR Media LLC and the ETF Store are related by common ownership, they are separate and distinct entities, and anything discussed on this program should not be construed as an official statement by the ETF Store. This program is for informational purposes only and does not constitute investment advice. Investing in crypto assets involves substantial risk, including the potential loss of principal. Any past performance figures discussed are not necessarily indicative of future results. Visit CryptoPrimePodcast.com for more information.